to another episode of the Weekly Wizard. And today I'm joined by Tom Schmidt from Dragonfly Capital. I hope I got that right. Sorry.
Yeah.
Tom, can you quickly introduce yourself and kind of your crypto journey? How did you get here? What brings you onto this podcast?
Yeah. Thanks for having me. Yeah. I'm Tom Schmidt. I'm a GP at Dragonfly Capital. We're an early stage crypto venture fund. We've been around since 2018, and we're a normal venture fund, but we only do crypto and crypto companies and crypto related projects, and really back teams at the very earliest stages. I think people kind of know us for two things. One, pretty much everyone on the team previously worked at like a crypto startup. So before Dragonfly, I used to lead product at 0x. I was there for 2 years. So I worked on a lot of the core products that people love from 0x. And other folks on the team have a similar background. And then we're also sort of split between Asia and the US. So we have about half the team in the US, half the team in Asia. And so we do a lot of investments in both sides of the world. And we think crypto is very global, unlike Web 2. And so teams really have to think about sort of a global go-to-market and a global presence. But I guess maybe more to your question. I used to lead product at 0x, was there for 2 years. And then before that, I was a PM at Instagram for about 3 years. Working on a couple different products there and sort of doing the traditional Silicon Valley thing. But I actually got into crypto during undergrad. I did CS undergrad. And I think a lot of folks in the CS department at that time, this was kind of like 2012, 2013, were super into Bitcoin. And actually, I wrote like an ethics paper on Bitcoin because you take an ethics class as a graduation requirement. And so, a lot of people obviously were coming at it from sort of the technical angle. And I was sort of getting excited about it from thinking like, what are the implications of having this sort of stateless money? And then I kind of got more into it, and I started actually mining Bitcoin in my dorm room with some friends of mine. One of which who's actually Renila Rumberg, who runs Audius, so sort of a small, little group from there. And then, I think kind of after the Bitcoin crash in like 2013, I kind of forgot about it. But after I left IG in like 2017, I kind of got more excited about what was going on in the Ethereum space, and it felt a lot more to me kind of like the early internet. And that's kind of when I got more excited about it, learning Solidity, hacking on a few things, and got into 0x, and the rest was kind of history.
Wow. How's your research from 2013 holding up nowadays?
I think it's funny. I think I was excited about it in concept, but I sort of wrote it off a little bit, despite mining it. Where like, banks will implement this, and this will be like banking infrastructure, and like maybe it was a little bit like the Ripple thesis to an extent, like 2013. I think part of it was sort of the lack of programmability and just the fact that with Bitcoin or Litecoin or Dogecoin, they're all sort of around at the time. There just wasn't a whole lot to do. And I had friends at the time who were working on crypto startups, and really I had very few options. It was basically start an exchange or start a payment service. And the payment services all like didn't really work. So really the only thing you could do was start a centralized exchange. And I personally didn't find that to be a very exciting business. Actually, I almost worked at Coinbase in 2013. I was on like an email thread with like Fred and Brian. They're like, hey, we're taking on interns for the summer. Why don't you come work? And I was like, I don't think this is really for me, but I appreciate the offer. So maybe that was a mistake, but I ended up kind of in the same spot regardless.
Yeah. Who could have foreseen that there's like a global financial infrastructure being built, other than Vitalik himself? I guess, looking at Bitcoin in 2013 was like a very different experience than kind of thinking of it in the system that we have nowadays, where you have a lot more permissionless infrastructure around it, I guess. Interesting. So I'm always wondering, so there's like general partners, there's like limited partners. What are these different positions in venture capital firms?
Yeah, I think, you mentioned that you want to sort of like demystify venture because it seems maybe a bit mysterious. And it's not that mysterious in my mind. GPs are kind of the people who, run the fund, and they commit some of their own capital into the fund. LPs also commit their own capital. They're basically the investors into the fund. So we have a lot of great investors who basically give us money to then go back, early stage teams and sort of help them build and ideally return, a good return on their capital. So that's like kind of like the main distinction, I guess. It's not super mysterious.
Yeah. Okay, I see. How many people do work at Dragonfly?
Yeah. We're about 35 now. And part of that is our back office. So, our legal team, compliance team, et cetera. Part of that is obviously the venture investment team. But then over the summer, actually last year, we also launched a hedge fund, which is separate from our venture fund. Say they do kind of more active trading, separate team, separate capital base, different strategy. So I think crypto, there's always sort of this weird conflict where some people are traders and they're very short-term thinking and they trade thematically and they hold positions on a few months time horizon or a few week time horizon. And then there are venture investors who are invested on a multi-year time horizon. When we're doing an investment, we have a holding period of 5 to 8 years when we're doing an investment. And so we often don't have liquidity. We're locked up for a very long period of time, and it's a very different style of investment and mentality than I think what most people are used to, which is sort of this hedge fund, actively traded thing. So we have sort of different teams and different capital bases that have these different strategies.
Yeah, I see. How many of the people kind of do operational research, and how much are more like back office people?
Yeah, I think we're also maybe a little bit different in that we don't have like a designated researcher or analyst team. I think everybody at Dragonfly is I would say maybe 80% of the team is technical, and everybody has this operator background where they previously worked in crypto in some capacity. So like Haseeb, who's one of the other partners with me, he was at earn.com, which got acquired by Coinbase, and he was an engineer at Airbnb before that. Mia, who's also on the investment team, she used to run BD at Amber. They're one of the largest market makers in Asia. So we kind of have this sort of disparate background, but all sort of connected to this idea of working in the crypto industry. And so, when we're publishing research through Dragonfly Research or when we're diligencing deals, it really comes from everybody on the investment team. We certainly have some researchers in house. So Ivan Bagati is one of our researchers. He published one of the first front-running attacks on Bancor back in like 2017, sort of talked about this idea of sandwiching and the issues with AMMs, and so very OG in that regard. And he recently built Mining DAO, which is sort of like a decentralized version of Flashbots, so pretty cool stuff. And then we also brought on Max Wolf recently as a researcher in residence. So he is actually very OG. He invented flash loans. So he built Marble Protocol, which is the very first flash loan thing on Ethereum. He built like the first like Uniswap TWAP Oracle. He was at Compound for a while. So they kind of do solely research, but everybody on the investment team, for the most part, we sort of do our own research. We diligence our own deals, and we sort of had that technical background and that operational understanding to be able to look at deals from our own experiences and our own perspectives.
Yeah. Do you think that gives Dragonfly a unique advantage in the market? Especially, I think like I've heard in the past that the deal flow is pretty dense. Like lots of investors are trying to compete for the same spots, and you coming from an operator perspective and having lots of operational insight, is that kind of a unique selling point that you kind of can make to projects you are like trying to invest in?
Yeah, I like to think so. I think certainly the space has gotten a lot more crowded versus 2019 when we were doing deals then. You have a lot of traditional Silicon Valley VCs who are now starting to dabble into crypto, and that's just like more capital fighting after the same deals. You have growth stage funds like Tiger and Coatue also doing crypto deals, or these crossover funds rather. And for us, we're crypto native. We only do crypto, and so you really sort of speak the language of these entrepreneurs. But yeah, I think if you look at a lot of funds even within the crypto space, a lot of them are people who come from more of a finance or investment background, investment banking background. And I think that's fine. You can certainly do super well, with that background investing in crypto, and many have. But for us, I think venture is, it's a little bit like getting married when you do a deal. It's like, hey, we're going to be seeing each other, several times a month for the next 4 years. And I think a lot of entrepreneurs want to work with someone who's been in their seat before. They've, worked at a startup, they've built a startup. They're maybe technical, so they can actually jam on product and work on that, and they have the network in crypto. We sort of know everybody in all these sort of different corners of the crypto world. So if you need help to get connected to person XYZ, we know those people, and we can sort of speak to experience when we do an introduction. So I think that's sort of a large part of the selling point. And again, with Dragonfly, we also have this additional sort of cherry on top in that we have this global presence. So if you're a US team or a European team and you want to do anything in Asia, we can help you really have an incredible network out there. And we're investors in 4 of the 5 Asian unicorns, and we have Sequoia China anchored our fund too, and so we have deep roots there, and vice versa. If you're a team in Asia and you're thinking about, hey, how do I reach U.S. customers, European customers, we can help you with that as well. So sort of one of the things that makes Dragonfly unique.
Yeah, certainly. The Asia and American focus, that sounds very interesting, because I think little teams are bridging that gap very, very efficiently. So that's a very interesting thing to consider. Yeah. How does fundraising in bear markets differ from fundraising in bull markets?
Yeah, I would say for the most part, LPs are very pro-cyclical, which is unfortunate. Everybody wants to buy, Bitcoin when it's at 62K. Nobody wants to buy Bitcoin when it's at 10K. I think luckily LPs are getting more educated about the value of crypto and investing in the market. When you invest with a venture fund too, you're tied up for a very long period of time, and so we sort of manage a lot of that cyclicality for you. We're not going to be selling the top or buying the top and selling the bottom. We sort of help you hold, which is there's a concept of an illiquidity premium in some regards, and I think ventures tend to outperform in part for that reason. But yeah, it's certainly we raised our fund too in 2020, and a lot of it was a dog. A lot of LPs were not interested in investing in crypto, and it was sort of a whole slog just to sort of get the capital together. But this time around, I think it was actually much easier, and I think a lot of LPs are warming up to the idea of crypto and are much more excited to deploy. And I think it's also just become more institutionalized. You see a lot more services and a lot of more traditional funds that are dipping their toes into crypto, and so in many ways it's being de-risked, and LPs are understanding it better. I think it's always a bit scary when you're the first crypto investment that an LP has made, and you have to do a lot of explaining. But that's becoming less and less the case. A lot of them own some Bitcoin, or they own some Ether, or they've invested into another fund, and so they're familiar with a lot of the core ideas of crypto. And so it's a different sort of sales process this time around than it has been for other funds.
Yeah, I see. Interesting. And how does that whole spiel basically translate to the founders you are reaching out to, or who, I don't know, how, like deal flow is always a mystery with VC, so I'm not going to try to dig deeper into that. But I guess like the types of founders and the types of projects that emerge out of kind of bull markets and the projects that like get built in the deep of or like bear market. What even is a bear market? But like in market downturns and in market upturns. Yeah.
Certainly, I mean, like we do see the types of founders that we see now are different than we saw in 2019. I think a lot of those founders stuck it out through the bear market, and they were very vision driven. They were often building towards something that was kind of intangible. And I think what we're seeing a lot now are a lot of sort of Web 2 founders or Web 2 talent who are trying to get into crypto and sort of navigating the crypto idea maze. I see a lot of people zeroing in on the same idea. A lot of like the most obvious stuff is sort of being built by Web 2 founders, which I think is great. But I think we're looking, I think, more and more for people who are doing more cutting edge stuff, the kind of things that you sort of discover after spending some time in this space and sort of exploring the fringes of the space versus hey, we're going to do crypto tax accounting or something like that. It's like something that is very safe, very underwritable. I think there's also things that traditional Silicon Valley VCs love to buy. But I think really like the generational companies are sort of the cool, weird shit that like you really only get if you've been in the crypto space a while and sort of understand all the different components and all different actors. But I do think maybe the thing to underscore is there is just so much talent flowing into the space right now. We see a lot of teams coming from FANG companies, a lot of teams. A lot of people leaving big crypto projects and leaving big crypto companies to go start their own thing, which is, I think, a really healthy sign that the ecosystem is maturing and people aren't just sort of sticking with a small number of companies. So there is definitely a sort of startup explosion right now in crypto, which is great to see.
Yeah. So recently, Andre Cronje announced his departure from the crypto world, pretty much. And do you think that might be a sign that the OG devs are kind of too rich, and or maybe a sign of the space is really hostile towards devs? Or do you think this is just a very special story?
Yeah, I think there's a lot going on in here. Certainly, one hot topic these days is just around vesting and liquidity periods for early stage teams. In a traditional company, you might not see liquidity for your equity for 7 to 10 years, which is kind of the time frame that traditional VCs also operate on. And I think in many respects that's great, because it gives founders a opportunity to build for the long term and incentivizes them to build for the long term. And I think there's a worry that when you give teams liquidity on a 2-year time horizon, hey, maybe people are too rich and they cash out, and there's less of an incentive to build. When we're doing investments, for us, really 2 years is kind of the minimum that we like to see for investing. But oftentimes and preferably we're seeing 3-4 year, 5-year vesting schedules, which I think sort of more emulates what we've seen to be a repeatable path to success in traditional markets and traditional companies. I think that whole sort of space is still being figured out, and there's the market sort of sets the vesting schedule in a way as well. And I think oftentimes we see teams voluntarily agree to longer lockups or longer vesting schedules as a sign that they're long-term committed to building something real, because I don't think you can really create a whole lot of value in a year. I think that's just like way too short of a time horizon. To the Andre thing specifically, I've totally respect for Andre. I think obviously what he did with Urine was like incredible, and sort of frankly spawned this entire segment of the market that is around fair launches, and sort of stoked this conversation around are VCs necessary? Should we just build fair launches? A lot of fair launch projects sort of emulated by Urine. And obviously he's an incredible builder, right? Like, he just shipped so many things, and that is also just somewhat rare to see in the crypto space. I think I am maybe more of a skeptic or a critic in that I think shipping something is like not necessarily the hard part of building a startup. I mean, a lot of people have an idea and they can build the idea and they can ship it, but the hard part is finding product market fit. And oftentimes, most of the time, that's not going to happen on the first iteration of the product. That's going to require shipping something, looking at feedback, looking at metrics, iterating, and eventually finding something that people really love and is super sticky and is going to build a great business in the long term. And I think outside of Urine, I think most of Andre's stuff has not really hit that mark. It's kind of like you ship something and the metrics look really bad, and then you kind of move on to the next thing, because it's boring and it's hard to do iteration and to find product market fit. And that's kind of where we see the best entrepreneurs really grind it out. They're willing to work and ship something for years and years and years until they find something that sticks. And I think in many respects, launching something and then kind of abandoning it and then moving on is like, it's a cool, it's cool to be able to hack and build that quickly, but it's less impressive, and it's not really, I think, emblematic of what we want to see in a successful founder or a successful startup.
Yeah, very interesting take. Love to hear that. Similar to what the founders of a project sometimes have, that like the market is too liquid. There's recently been kind of this meta of the VE token model. Yeah. So that was also kind of championed by Andre, and I think Pickle Finance implemented it first. So if you could quickly explain it and then maybe give your take on it, that would be great.
Yeah, VE is I think it's vote escrowed is what it stands for. Yeah. And the idea is normally in a governance process, you sort of get a pro rata weighted share of the vote depending on how many tokens you have. So that's how like the maker governance process works. That's the compound governance process works for comp and for MKR. But people can easily buy a bunch of tokens and use that to manipulate the vote, or people don't like what's going on, they can easily sell. And so the idea with VE is basically you can take your governance tokens and you can lock them up, and you get more governance power depending on how long you're willing to lock your tokens up for. So if you're willing to lock for 2 years, you get some additional bonus multiple on your tokens versus somebody who's only willing to lock for a week or something to participate in governance. So in theory, the people who are most long-term aligned and are willing to lock up their tokens get more share in the governance process. And then correspondingly, a lot of teams are doing liquidity mining as well. And so oftentimes you're getting a bonus on liquidity mining for locking up your tokens for a longer period of time. So Curve did this, where you get more CRV for locking up your CRV in governance if you're an LP and in Curve. Ribbon did this recently. They launched VE RBN. You get more RBN on your deposits depending on how much RBN you have locked up. I think sort of what we've seen in Curve though is that crypto really loves liquidity, and people will always find ways to create liquidity on top of the things that you are going to create that we want to be illiquid. Sam actually talked about this a long time ago, probably during DeFi summer, about how liquidity mining is kind of a failure because the big funds will come in, deploy a bunch of cash into the farm, and then hedge out the token exposure on perps, and so their P&L is locked in. They will short the shit out of your token, and they don't actually care. They'll just farm and dump. Their P&L is locked in, and they'll leave. And I feel like there's maybe a bit of a similar thing here where people are now creating liquid layers on top of these VE tokens. You just create a tokenized interface that sort of deposits into the VE, so you get maximum returns. If I'm just a normal LP and I don't really give a shit about Curve, I can just sort of borrow somebody else's Curve effectively to sort of get the maximum rewards. And so a market's always going to form no matter what. And so I think it's an admirable, attempt at sort of creating long-term alignment and creating alignment between LPs and between token holders. But I think in practice, the mechanic sort of gets gamed, and people create these sort of meta layers to game the actual mechanic. But it sort of touches on this idea, which is governance is an unsolved problem in crypto. I think liquidity mining and incentivization is an unsolved problem in crypto. And so this is sort of the latest iteration. We'll see. It seems to be popular with teams, and I think some version of it will probably stick around. People probably get iterated on a little bit more, but I think in the current version, it's not quite achieving the goals I think it's set out to achieve.
Yeah.
Actually, on the Curve bit, as long as this is the Dune dashboard, or the weekly wizard rather, I got somewhat flamed recently for pointing out that with Curve in particular, I'm maybe broadly speaking a bit of a tokenomics bear. I think tokenomics are often used to cover up a lack of product market fit in a particular product. I think something like Ribbon, for example, actually has incredible product market fit. It's they're growing really organically. They're really sticky, great retention without doing any sort of incentivization. But for something like Curve, which is supposed to be the optimized stable swap AMM, in reality, they've really been bleeding out stable swap market share to Uniswap, specifically for sort of the head assets, Tether, USDC, DAI. And really, they've been dependent on UST and MIM to make up some of those volumes. And so, I'm kind of like, look, you guys are bike shedding over all this, all the tokenomics work and the VE Curve and the convex, which is creating this meta layer. I'm like, meanwhile, like your product is dying. Like nobody is trading stable swaps on Curve. You're bleeding out and giving up market share to Uniswap. And so, I'm kind of a product fundamentalist in some ways. Where I'm like, look, you have to build a product that people want to use that is market dominant, and you haven't done that. And that the tokenomics is almost sort of covering that up in a little bit. And people got mad about my Dune dashboard. I admittedly, MIM and UST were not included, so I probably should have did more of a data audit. So maybe that's a tip to all you wizards out there. But for the core assets, that the biggest stable coins, they have really lost all their market share. And I think that's kind of the core thing that we need to focus on, not the tokenomics.
Yeah, I see. Yeah, we are currently fixing all the Curve contracts. Curve is the only project out there that uses Viper a lot. We had to find internal processes to properly decode these Viper contracts, because if you just run them through the usual decoding tool, they just appear as Viper contracts, and it's like, what's happening here? So yeah, that was quite a riddle for us to solve, and it has been a long time in the making, but we're currently working on it. So hopefully soon we can fully see the demise or the continued success of Curve. We don't know yet.
We shall see.
Yeah. Isn't there also an argument to be made, though, that Curve is mostly good at helping stablecoins keep their peg instead of providing this? I mean, you just put up a large block of liquidity, which is basically through the Curve mechanism, where it's like you stay in the range of pretty close to peg way easier. So isn't that kind of the thing that Curve really does well today?
Yeah, I think that's the counter argument, right? Which is like it's sort of liquidity for hire. So if I'm Frax, I can pay them to sort of maintain the peg for my thing. I'm a bit skeptical of this argument. I don't think like that's actually what people are getting compensated for. And I think ultimately, like if you're running an exchange, exchanges live and die on volume. I think of it a little bit like you're paying a bunch of market makers to show up. and you have deep liquidity, but how valuable is that to some of these stablecoin projects versus you're having sort of an organic market form on something like UniV3, where that's sort of self-sustaining, right? Like the top protocols, the top projects, the top pools on UniV3 don't have to pay people. They're so naturally in demand that people just naturally want to sort of trade on them, and that sort of creates self-sustaining revenue. Right now, we're in this point where these projects are trying to bootstrap. If I'm a new stablecoin, I really want to bootstrap my peg. I really want to make sure that people believe in me, and so I'm willing to compensate people by buying Convex or buying the Curve token to vote for rewards for my pool. But I think in practice, like that's kind of unsustainable unless you're actually able to sustain. You're able to generate volumes on that. It's like how much money can you actually pay per year to maintain this peg? And you also have this issue of mercenary capital, as we sort of been discussing, which is, hey, it's actually way better just to either own your own liquidity or have this thing be self-sustaining versus having people show up to farm and then leave as soon as the APYs start to go down, which ultimately is going to be the case unless you actually generate the volume to sort of compensate. So maybe I'm a bit of a boomer in this regard, but I do think if you're building an AMM, if you're building a DEX, like you need the volumes to make it happen.
Yeah, I see. Yeah, those were very interesting market takes. So let's kind of segment to actually being on the Weekly Wizard. So you said you joined the OX product team back in 2018. Is that correct?
So, I think it was right at the end of 2017.
Okay.
So like December 2017.
Okay. So how did crypto data look back then?
Yes, it was. I remember this actually very vividly. So coming from Facebook Inc., which owns Instagram, I don't think it's controversial to say Facebook has some of the most incredible data infrastructure of any company on the planet. Period. I think unless you work there and you've seen it, it's hard to appreciate. But basically, you can query pretty much any piece of data within the overall Facebook Inc. Company super easily. It all runs super quickly. All the data is super clean. It's uniform. It's very, very easy to pull out analytics and insights for products that you work on, or just to understand what's going on with any of the companies or any of the products within the company. And the company is also just very data driven. Everything is sort of drilled down super, super deep. So really understanding on a user level, like what is actually going on with all these products. Goaling pretty aggressively on metrics. And I think that sort of shows up in the products. They're very growth driven. They're very data driven. And there's trade-off to that, but it's sort of core to what they do. And so that was a large part of my product training. And that was kind of what I tried to bring over to Xerox when I joined. I think I remember joining and talking about, hey, what are the KPIs? What are you guys tracking for top level metrics? And Will Warren, who's the CEO, pulled up Xerox Tracker, which was a sort of community driven data analytics site for 0x. Someone just made it, and it's cool, right? It's like back in that day, having the ability to show volume and users, like that's great. That really was kind of a pain in the ass. This was before even Ethereum ETL existed, which is what a lot of these systems run on now. Is this open source software for pulling Ethereum log data and ETLing it into some sort of relational database that didn't even exist. So this was all sort of manually done. But for me, I think looking at that sort of L1 metric is never really good enough, right? Like you have to actually understand what's going on under the hood that's driving volume, that's driving the user growth. Who are these users? Like what are people actually trading and why? And so one of the first things I did at Xerox was actually build our very first version of an internal data pipeline. So I sort of built very, very basic like cron job ETL thing that would scrape 0x events and join them and put it in like a metabase. And that was really like the very first version of data at 0x. And I remember actually I was at ETH Berlin over that summer. A couple of Xerox folks went over, and that's actually where I met Mats and Frederick from Dune. I was like hanging out outside. We were hacking. We were coaching a few teams on how to use 0x, and somehow we started talking. And I talking about data, and I obviously love data. And I showed them the dashboard I had built at 0x, and that they were like just starting to work on Dune at that time. And so I think it maybe sort of inspired them a little bit to go deeper on Dune and to sort of tee the whole thing up. And the other, I guess, funny story is at a certain point I was unable to keep sustaining the internal 0x data pipeline, and because I'm a PM and there's a lot going on.
Yeah.
And so I actually got connected to Alex Svanovic of Nansen, who was doing data contracting at that time, or data engineering contracting at the time. So Alex was actually one of the very first data engineering contractors at 0x, and he helped build basically the second version of the 0x data pipeline. So I think 0x is very, very sophisticated when it comes to data. I mean, that's what's driven a lot of the product development, is just looking at, what are people trading on chain? What kind of liquidity are we seeing across different exchanges, which is not really a thing 2 or 3 years ago. The whole pivot actually to 0x API and Matcha was actually driven by looking at on-chain data and seeing that, hey, aggregators are kind of rolling up the market. This is 2019, DexEgg and 1inch. Every single week, they were adding to their market share and the percent of the DEX volume that was going through an aggregator. And so, to me as a PM, I'm like, look, like this is growing like crazy. Clearly, there's sort of this whole aggregator thesis that's where they kind of capture value and that's where they have their pricing power. And it's at the same time, we've seen that it's really hard to sort of get that liquidity flywheel going for an order book. It's just really, really tricky. And there's also just a lot of liquidity fragmentation. And overall, there was like Kyber and Oasis Dex and Uniswap and Bancor. And so that really, I think looking at that data and looking at those on-chain insights is what spurred 0x to build 0x API and build Matcha and sort of operate on this aggregator level, which has been, it's been great for them. And they did super well. And I think they do a few $100 million in volume every day, which is incredible. But you really only sort of pull out those insights and are able to sort of adjust product direction if you're going deeper on chain and understanding what people are actually doing versus just like, looking at volume or looking at users and not sort of going a level deeper, which is, what's using something like Dune allows you to do.
Yeah, well, data-driven insights right there. So were these kinds of analysis done with Dune, or was this the OX internal API or
it was
data pipeline?
It was a mix. I think sometimes when we were looking at 0x data, I think oftentimes the first party data was a bit better than what was available on Dune at that time, especially because for us, a lot of the data is off-chain, where we have off-chain order books. And so we're scraping a lot of these relayers and that data just isn't available on Dune. But when we're looking at the market more broadly, we're looking at Dune to sort of cite what's going on. And I think a lot of the feedback that I gave Mats and Frederick also sort of helped evolve Dune product development to get to the point where I think a lot of 0x now certainly have their own internal tooling as well, but they still use Dune to like do a lot of internal insights and whatnot. And certainly if as a VC or as a public facing company, there's a little bit of expectation now that you have a Dune dashboard, right? Because it's auditable, it's editable, it's forkable. I don't think people really settle anymore for just the, hey, here's our closed source data dashboard, trust us on the numbers. Not only because you don't really get the insights, you can't say, well, like, who's actually using this? Where are these numbers coming from? But it's also just, it's a bit hard to sort of trust somebody saying one thing without being able to, audit it yourself.
Yeah, I see. So if you think back about kind of this evolution of crypto data that you've gone through, I mean, you must have seen it all, like back in 2017, like there was nothing. And now we're like in this vast world of data. So if you think about like the specific like points where you think like, hey, this was really a big unblocker, could you kind of walk me through those?
Yeah, I think the big shift happened sort of in 2019, where there are a lot of very OG crypto data companies. There's things like Coinmetrics or Glassnode that are kind of more conventional data as a service models where I pay you, you give me market data or you give me network data. And then I'm going to integrate that, or I need that for compliance purposes because I'm Fidelity and I need to know what's going on with Bitcoin. And I think sort of this latest wave of crypto data companies, a lot of those teams were founded around this idea of teams and projects being layer ones. So every blockchain being a currency and needing to understand what's going on with every single blockchain. And that's sort of what you see them being oriented around it, right? It's like, how many Bitcoin holders are there? When was the last Bitcoin move? What's the hash rate? Like, it's all sort of centered around these layer ones and the currencies and all the metrics that you want to care about if you only cared about sort of layer ones. And obviously that's, a lot of those same metrics would apply to something like, Litecoin or Monero or a lot of those sort of OG blockchains. But I think around 2019, people started to realize like, hey, there's actually a lot of activity happening on chain. It's not just Ether moving around. It's not just the hash rate of the Ethereum network, but it's all the things that are happening inside of smart contracts that at the time were really inscrutable, right? Like Ethereum ETL was just sort of coming out. There was like this, BigQuery dashboard or BigQuery database that also had, Ethereum ETL piped into it, but there weren't really great tools at that time. And I think if you think about the two sort of crypto data unicorns of this era, it's Dune and Nansen, which go a level deeper and help you understand what's actually happening on chain. There's this whole sort of play happening of all these different people doing different things, different contracts doing different things. And unless you have the data and you have the indexing ability to help understand what's going on chain, I just don't think it's super valuable in 2022 to be looking at some of these higher level metrics. There's a lot more interesting stuff happening when you actually understand what's going on with the smart contract.
I see. Very, 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 very interesting. So, kind of, where do we see this going next? So we are already at a point now where we can look on chain, we can spot certain trends, we can categorize holders, we can look at an individual wallet and really see what he has been up to and all of that. And where do you kind of see us going with this?
Yeah, I think one of the reasons that maybe I should mention this for people who don't know. So Dragonfly led Dune's seed round back in 2020, and so we've been very deep with the Dune team for a while. And I think what I liked about Dune was this sort of more GitHub approach to data, where you're not reliant on a single company to spit out insights and massage everything. Crypto moves so quickly, and there's such a massive long tail of data that I think it's really impossible for any single company to have really high quality data for the latest, hottest, newest thing that just came up yesterday. But with Dune, that's what we see, right? Like Constitution DAO, like the day after it launched, there's a Constitution DAO dashboard. You can see all the depositors, you get all the metrics that you care about. And even for some of the more niche projects, you can create a Dune dashboard for that. So I think this approach works really well for crypto, where you have this incredible long tail of projects that just can't be, I think, massaged or sort of analyzed by any single company. And it sort of speaks to the open source nature of the data within crypto, which is very, very different than Web 2. I think when I think about what's kind of missing right now, it's sort of about adding more context around what's actually going on chain. And I think one of the killer features that Nansen has had that very few people have actually added or done well is sort of wallet labeling and address analysis. So it's one thing to say, hey, here's all these people who are in this farm. Here's all the people who are trading on Uniswap or whatever. But it's another to know, hey, this person is Alameda, or this person is also a big LP on Sushi, and that sort of insight I think is actually really valuable when it comes to, again, understanding what's going on with these projects. If you're a fundamentals driven investor, is it just the team depositing into their own pool again, or is it do they actually have this sort of nice diverse long tail of users? And I think that's kind of what's missing from the space right now. Is there's certain people going around who are sort of selling some of this data or maybe labeling some of this data. And I think it'd be great to see a more community-driven approach to understanding addresses. The other component that I think is missing is mempool level data. This is sort of the killer app right now for people who are doing MEV work or for people who are understanding what's going on in the mempool. Bloxroute, which is another Dragonfly portfolio company, is really big in terms of providing mempool access and mempool level data. But I think for a lot of folks who are sort of Dune wizards, maybe like myself, a lot of that is sort of out of reach. I don't think most people are pinging Bloxroute to sort of start scraping mempool data and understand, hey, where did this transaction come from? How long has it been the mempool? Is this person using flashbots and what's actually going on? So I think that's probably the other component is bringing in sort of the more this off-chain data that is related to what's going on chain, but maybe a bit inscrutable or a bit difficult to parse right now. So that's kind of where I see the space going. But overall, I mean, I really like Dune's positioning, and I think Dune's metrics look crazy, and it's built, again, a very sticky, retentive product that is kind of unlike anything else in the market right now.
Yeah, anything unlike everything in the world, pretty much, because there's these crypto data is just special. There's nothing like it in the world. There's no, I mean, government databases to some extent and websites like Our World in Data, but that's not really the data you can really trade on or make very interesting analysis on. Although, there's some interesting pieces of data there, but no open database that you could run queries on.
Right.
So you're basically saying all the infrastructure blocks are in place except for bringing off-chain data on, and it's mostly just people doing cool stuff with or generating content. with the data that we already have?
I think that's probably more of it. Obviously, there's going to be different customers for different types of data. Traders are going to want something different. News sites are going to want something different. Teams are going to want something different. But I do feel like bringing more data into this kind of environment allows people to create more insights and add more value than they'd be able to do just by trying to stitch together strictly on-chain data. We see a lot of stuff happening off-chain, and you're sort of blind to that if you're only looking at what's going on on-chain. So I like to see more of that, as well as just I think more maybe professionalism or higher standards around how data gets used. I feel like a lot of people are kind of misleading around how they cite data for their projects or how they cite data in news articles. And I think it's gotten better over time in some respects, but in some respects it's also gotten worse. So I think I'd like to see the community almost, sort of hold all these projects and these news outlets to a higher standard around how they actually use and cite data, and ideally bringing some open sourcing into publications and media as well.
Yeah, I recently had the idea or the revelation that Dune is kind of like a Wikipedia, and we should probably optimize a bit. Whatever. If how first of all, how did you become a Dune wizard? Did you kind of have this knowledge from a past job, or is it something that you kind of picked up along the way, just for like actually querying on Dune?
Yeah, I knew SQL just from being a CS major and doing some SQL in undergrad, and I actually got more into it at Facebook because all of the Facebook data systems also run on a SQL interface, and so I got pretty good with it there. And so I think once SQL, it's pretty easy to transfer over to a new data set. Obviously, there's a lot of quirks around dealing with crypto data that you have to be sort of cognizant of, and maybe the data maybe isn't as clean, but once you get used to it, I think it's largely pretty readily transferable. So knowing SQL sort of allows you to do a lot of different cool things in the world. So I highly recommend everyone take some SQL courses and get pretty familiar with it. Obviously, I would love to see more of a GUI or WYSIWYG style editor. Those are also pretty popular with like analytics services, or they have this at Facebook where it's sort of you can sort of select a couple different group buys or order buys or metrics, and it's not required to write code. And I think that would make Dune also a lot more approachable for retail users who are trying to understand this. Glassnode, I think, does a decent job at this, but I'm imagining more of sort of a amplitude or mixed panel style approach to analytics, where hey, if I'm a new project, maybe I don't know SQL, or maybe I can't hire someone to do SQL, or maybe I'm just a retail investor and I'm trying to better understand what's going on with the project. Being able to easily sort of select a couple items from a drop down and have the graph that I want to have, I think would be great.
That's a very interesting insight. So kind of like a no code or low code solution to doing great analysis, really on Dune.
Yeah, I think that's kind of the thing that's missing right now when I think about it. It's one thing to be able to write SQL, but there's a lot of rough edges around it, right? You get a lot of weird error messages. Maybe your query takes forever to run. And I think it's more approachable than a lot of people think. I think it's actually a pretty straightforward language to learn compared to a lot of other programming languages. But it is still a barrier to entry. And I'd like to see more and more people use Dune to answer their own questions, to cite their sources, to present their analytics about their project. And so I think lowering that barrier to entry would be great.
Yeah. What kind of skills would you like rate very high on the like what you need to be a Dune wizard scale?
I think at a base level, knowing SQL will be good. And I think understanding a little bit about how Ethereum works and how blockchains work is also pretty important. There's obviously some weirdness to the transactions and knowing how receipts work and knowing how logs work and everything like that. But beyond that, I think a lot of the best wizards started not even knowing SQL and they sort of learn it on the job. I think it's really just about being inquisitive and asking sort of that second layer question of, okay, well, here's some data, but what's actually going on under the hood? How can I audit this data to make sure that it's actually accurate? What's actually going on with this project? Who is this person? And I think having that sort of detective impulse is probably like the key. I think the key leading characteristic of successful analysts that I've seen, where they're not really satisfied just looking at a roll up. they want to actually see what's going on under the hood. And I think that's where a lot of the best product insights come out, is finding those interesting pockets of activity or interesting pockets of users, and saying, well, hey, maybe we can make a product around this, or maybe these people could be served better, or this is going to impact how I think about the valuation for this project, or whatever it actually is. So be curious is maybe the answer.
Yeah, that's also always the answer. If somebody asks me, like, follow your curiosity and work on stuff that you really want to know, because then everything else you'll figure it out along the way. But if you really have this like intellectual curiosity, like I just want to like surface this data, you'll get there somehow. And if it takes like 100 messages in Discord to like figure out this problem, it's gonna work eventually. Would you recommend people to like dive into Solidity, or are like a few articles about like how the EVM chain works kind of enough?
Yeah, I don't think you really need to know Solidity. And obviously not every contract is even written in Solidity. So I think just some basics around how the EVM works, how event logging works, how transactions work is probably sufficient. And then I think also just looking at inspiration, like look at some of the top Dune dashboards, see how they write their code. And I think that's often understanding that sort of head to tail is often one of the best ways to hone your own skills. And oftentimes I'll look at other people's queries and say, hey, are there techniques that they're using that I should be using? Very minor example, but I remember Alex Kroger, another well-known Dune data wizard. He was a first data scientist at 0x, and we worked together pretty closely. And his whole thing was putting commas in front of new lines as opposed to the end of the line, which is a Coinbase thing, which I've now adopted because I think it just makes everything feel so much cleaner. You avoid a lot of syntax errors, and kind of a really basic thing, but really you only learn from looking at other people's code, which is pretty standard. I guess that would be sort of my main piece of feedback is just like learn from example and try some stuff out. That's really kind of it at the end of the day.
Yeah. How many certified Dune wizards is there in Dragonfly?
I don't know. I think everybody uses Dune, and we actually use Dune a lot. I don't know if we have any certified wizards, but I think pretty much all my investment memos have like a Dune screenshot in them at some point. So we definitely look on chain to see what's happening. And again, it's where you find a lot of the best product insights. It's understanding what's going on under the hood. And being able to speak intelligently about different projects and the different metrics. I remember actually at 0x, like one of the things that we did was basically go on chain and look at a lot of the people who were market making on 0x, which was a very strange thing at the time, right? Like if you're a market maker on a 0x relayer in 2018, you're a very strange type of person. And so we were basically going through and finding those addresses on chain, and I was literally just tweeting like, hey, if you own this address, please reach out to me. And I actually met a lot of the top DeFi market makers who are now running pretty large firms just by sort of going a layer deeper and understanding what's going on chain. And a lot of those folks are somewhat well known now, or maybe still not well known, but it's a pretty powerful network to have, to be able to see who's actually using these projects. And I guess that's kind of the main point.
Yeah. So is there are you all like, is this like public research, or do you keep most of these queries and dashboards private? So that's kind of proprietary information, because I wouldn't it wouldn't immediately come to mind that there's like a big Dragonfly activity happening on Dune.
Yeah, a lot of it is some of it is public. I obviously publish dashboards and share it on Twitter.
Yeah, you are the exception. You're like, your dashboards are exceptional.
Thank you. Some of the stuff is private though, or I also sometimes do it on an alternative account, so people don't know that it's me doing it. So there's sort of a desire when you're doing an investment to sort of keep it private so you can sort of get the deal done, or you don't want to leak alpha. But sometimes it is fun to leak alpha. We talked about this recently with Gem. Gem is we led their seed round recently, and they've sort of been in this battle versus Genie. And now we sort of see that Gen is massively overtaken Genie in terms of volume, in terms of users, in terms of retention. And so we're happy to sort of share the Gem dashboard and talk about Gem stats and really sort of benefits us in some ways. But those are, again, sort of going on chain. You sort of see those interesting insights, such as seeing that Genie was the top taker on OpenSea for a while. That sort of informed our thesis around Gem as well.
Yeah, well. You can go all the way up and all the way down in crypto data. It's really amazing. Man, I had a question just now.
All good.
So a very special property about crypto data is that kind of you can't hide. So recently we've seen a lot of dashboards around Luxware and that whole spiel with like the volumes are fake and like those kinds of things. Is that something that you guys kind of actively track as well? So you're like trying to make a bear case for whatever investment you're doing. So kind of analyzing failed projects and trying to learn from those.
Yeah, absolutely. I think a lot of LPs asked us about Luxrare, or other teams we would talk to asked us about Luxrare, and if you look at the Dune dashboard, I think Dobby put it together, or I can't remember who. Yeah, it's pretty damning, right? Like again, don't take the metrics at face value. See what's actually going on. I think just the volume activity alone was pretty damning, where you see these huge spikes right at the end of a epoch, where people are trying to collect all the fees right before sort of the next epoch starts. So it's like you see these weird hourly, once a day spikes, which are clearly very inorganic, and then just very few users. But the most creative metric I actually thought to sort of assess wash trading, which is hard, right? Like, how do you know if two people are the same person? And there's some basic heuristics you can use, but they're not perfect. But the most damning one that I thought was basically looking at the percent of Luxrare volume that was zero royalty projects versus the percent of OpenSea volume that was zero royalty projects. So which ones are people trying to minimize fees on, right? Many NFT products, maybe most NFT products, have a royalty that goes back to the creator. But if you're just trying to wash trade, you don't want to pay that royalty. You just want to move the NFT back and forth as cheaply as possible to sort of collect the fees. And that was just like clear bipolar distribution. OpenSea is like 98% royalty, so pretty legit trading. Luxrare is like 1% royalty. It's 99% royalty free, which just sort of speaks to the fact that people only want to wash trade to collect the Lux token. There's not a lot of organic activity going on. So I don't know. It's pretty open and shut. But also, not to ramble too much, but I think it's another great example of bringing in off-chain data would be super interesting here. It's one thing to sort of look at volume, but if you actually look at the Luxrare order book, it was super barren. There's basically no liquidity at floor price. Everything was sort of being marked up. And so that's an off-chain order book. It's not going to be accessible just by looking at on-chain fills. But if you have that data available to you, that is also, I think, pretty compelling case that like nobody's actually trading this. Nobody's actually treating this as a legitimate project. People are just trying to collect the Lux token because nobody's actually trying to sell something. They're not posting legit orders on Luxrare.
Yeah. We'll see what happens with it. It's actually, I think the marketplace is really not bad. But
it's a great product.
The way they've launched the token and the whole like start of it, and now we kind of run into the problem that we were talking about at the beginning of the devs now have like a 70 million fund from their Lux tokens that they had and they staked, and now they have 70 million in Ethereum, and now it's like they've made it. Like, what keeps them working? So it's a very weird situation. Although so far they've kept shipping, but if we really go into like an NFT bear market, like, is it really that likely that they'll like keep shipping against the OpenSea engineers who are all locked up or in equity for like 5 years? Or I don't know the vesting schedule of OpenSea, but I would imagine that OpenSea at least has like 4 years or something. We'll see.
We'll see. I think it also speaks a little bit to the point I was making earlier on Andre, which is it's one thing to build a great product, right? Like Luxrare looks great, it feels great, it's a well-designed product, but that's not sufficient to build a great company and to find product market fit. And so, in reality, it's like if they were, locked up and they weren't doing this weird token thing, it would require a lot of iteration to find, what it takes to build a competitor to OpenSea and to sort of find sticky users and product market fit. But that's not really what's happening. They sort of launched the product, they're able to cash out, and now there's not really an incentive to iterate and sort of do the hard work to find that sticky product.
Yeah. I mean, they actually had found a product. They were just OpenSea very clearly has the network effect, so it's very hard to like break through this network effect. And I guess that was their like they had one shot and they pretty much failed. So now it's like now they really need to like dig into this product a thing and make something that truly innovates or something like that. Yeah, certainly interesting. I think that's all my questions. Maybe what is your favorite dashboard on Dune that you visit the most?
My favorite dashboard on Dune. Honestly, the favorite thing the thing I have bookmarked actually is just looking at the trending dashboards. I feel like that is actually a great source of alpha. Is every day, what are other people looking at, and is there anything interesting going on there? And so, obviously, I have dashboards that I like the Dex Metrics dashboard that I think Fred put together. But for the most part, I think it's more this meta level question, which is what are other people looking at, and is there anything interesting going on there? And those are the kind of questions you are asking as an investor and try to keep up to date with the latest in the space.
Yeah, So often I go into the trending dashboards, I'm like, what has happened today? What is this new project? And especially for some of these NFT projects, you go in there, you see the first picture, and you're like, what is this? What are people thinking? But I fully agree. I also we didn't ship that feature too long ago, and it's really a source of alpha. It's always pretty much up to date of what's happening currently. So for the last few days, I think the Ukraine DAO dashboard from Michael Sibling has been up in there, and it's just what is it? You don't even need Twitter anymore. You could just you can just look at Dune trending. Very cool. That was all my questions. I think we'll let Thomas join us, and he'll ask us the questions that came from the chat.
Hey guys, how you doing?
Thomas,
pretty good.
Doing well. It's been fun.
Yeah, really fun, really interesting. So we got a few good questions. First one from Drew. He says, Tom mentions meeting with the Dune team earlier while hacking. What does he believe may have been the key thing or quality of his dashboard that they really liked?
Good question. I'm trying to remember this meeting now. I think it was frankly more about just the fact that we had this kind of dashboard and we were actually doing the work to understand what was going on with 0x at the time. And I don't think many other teams at that time had any traction. A lot of them still weren't shipping, or they had products but no one was really using it. So being able to have some activity that you could look at was valuable. But also just one thing that I do appreciate in crypto is a lot of people don't come from a Silicon Valley background. You go to a lot of these Silicon Valley startups, and a lot of people have the same kind of background. They're hopping from company to company, startup to startup. Crypto, you really get this incredibly diverse set of backgrounds. People come from academia, finance, different parts of the world, whatever. And that is great in many respects. You get a very diverse perspective, but it's less great in that if you are trying to do sort of data-driven product development, you often don't have the training to be able to look at data, get feedback, use that to refine the product roadmap, and go on. And so I think at 0x we were one of the few teams that was actually doing that, but we're actually looking at on-chain, seeing the activity of how our protocol is used, and using that to inform the next iteration of the product or what we should be shipping. So that was maybe I think the key thing in 2018, which was kind of rare, sad to say, but it was sort of a core part of the culture at 0x.
Okay, awesome. To what degree do you weigh or take into account dashboards or analysis from Dune and the valuation of protocols that you're interested in or targeting? And that's from Cryptic Cats.
Very heavily. I think a lot of our investments, to be candid, are also pre-seed and seed stage, where the product doesn't exist, and we're mostly backing a team and an idea and a market that we like, and hoping that the team will figure it out. And that is a little bit of our bread and butter. And we've helped a lot of teams with product iteration, ideation, getting to market, et cetera. But for things that are kind of Series A and beyond, we're really looking deep at the metrics and at the data to make sure this is something that has product market fit and is sticky and is working. So we're looking at things like user retention, looking at distribution of volume, distribution of deposits, looking at where those volume and deposits are coming from. And I think all those things sort of inform how we think about traction and giving something a nice valuation. So it is pretty key. If it's not coming from Dune or if it's coming from another source, for these later stage investments, we really have to be confident around traction before we underwrite something. And maybe that's a little bit unique to Dragonfly. I think we have sort of a different investment criteria and process than other funds, but we are sort of product fundamentalists at heart, and that's kind of what we look for.
Okay, great. If you were receiving a job application for a role, a crypto-centered role, or a role in your a Dragonfly, what's at the top of the totem pole for things that you look for? Would it be June work, education, Discord activity? What would you really look for?
Yeah, I think the number one predictor of success for people I've hired at 0x, but also people that I've hired at Dragonfly, is just passion. Crypto is sort of unlike other industries in that I think people do have a lot of genuine passion. They're working, weekends, just not because they feel pressure to, because it's just generally super interesting and there's a lot of stuff going on. And so a lot of people are also very self-taught. They're sort of self-motivated. And so when we're looking at someone's your application, it's, hey, is this person, did they ramp themselves up on crypto, or are they sort of hopping over because it's the hot new thing and expecting to sort of be taught everything from scratch at Dragonfly? There's a really low barrier to entry, right, to writing super interesting analyses or blog posts or interesting tweets or interesting Dune dashboards or interesting hackathon projects. And so all those things are kind of things that we look at. I don't think education or work experience is really super valuable. Oftentimes someone's work experience can speak to their passion, where they've been working in the crypto industry at another place for a couple of years and it's really sort of driving them. But ultimately, I think we try to approach everybody on a as objective a basis as possible, and just say, look, is this person really passionate about crypto, and are they going to sort of succeed in the job, just on a basis of that?
Another one from Ben. What is Dragonfly most excited about for 2022?
Good question. Yeah, I think there's a lot of things going on. We're still doing a lot of investments in DeFi. I think at this stage, for us, it's a lot about sort of this next generation of DeFi. I don't want to say DeFi 2.0 because I think that's like it's a different thing. But it's kind of more about more complex derivatives, and frankly, the overall derivatives market getting a little bit more liquid, more exotics, things like unsecured lending, things like real world assets. I think those sort of things in DeFi that I get really excited about, and I think are very nascent. They're sort of primed to explode, but there isn't quite that sort of really clean product market fit and growth loop yet. So those are things that we're investing in that I'm pretty excited about. I feel like kind of next generation of what's going on. We're still doing some kind of like Web3 and DAO stuff. So I think one of the more exciting trends I've seen recently, and I think I feel like after being in the industry for a while, when you see something that has product market fit, like it's so obvious to you, and it's Constitution DAO. Constitution DAO is like, in some respects, a very basic process, right? It was like a smart contract through Juicebox. You put your money into it, and we're going to go buy the Constitution. But the fact that it was able to, get $42 million in a very small amount of time, and get this incredible sort of mass and community around it, people are really excited about this idea, I think, of crowdfunding to buy other things. And now we've seen a lot of people who are building projects in this same sort of spirit, like LinksDAO or Kraus House or whatever. But right now it's a little bit janky. It's not super easy to take in outside capital through this crowdfund and then go buy something. But I think the first project protocol that allows that to be super simple, sort of in the same way that Compound with the liquidity mining program inspired so many different projects to do liquidity mining. I think the first team that nails that kind of process for buying real world assets is going to absolutely crush it. We've seen there's just so much demand for this kind of thing, but the process right now is kind of janky. Making that super smooth, I think, is going to be a great product. So sort of things that are spiritually in that vein are things that we get excited about.
Awesome. Really interesting. That's it for questions.
All right.
Cool.
This has been great. Thank you so much for coming on, Tom. Yeah, great to have you. Always great to see your great research on Dune. Is there anything you want to leave with us?
Thanks for listening. And shout out to all the wizards out there and aspiring wizards. I think I'm looking forward to seeing everyone else's work on Dune as well.
All right. Thank you, Tom. Bye-bye, everyone.
Cool.
Thanks, Tom.